Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data, and our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be looking at the macro calendar and how we can use it to help time our trades. We'll also look at some of Matt's favorite top performing options backtests. Before we get started, Matt, do you want to share your screen and go over our positions from the last few weeks?
Sure. We took last week off for the holiday. We had Expedia on. We're still kind of a little bit below break even, but we're hoping for that to get a move. We still have 12 days left. We had SPY. That's doing well. We're doing well on that one. And then we had NDX. That did not do well. We had the 1870s, kind of a short calendar, so it kind of went up to 1870 where we didn't want it to go, and so we lost on that one. So we're about 1 win and 2 losses. So usually we're used to winning, so it's a little bit difficult, Tyler.
Yeah, that's the first time we've had a losing trade in a while.
Yeah, I still like it, but it's a good way to do a short calendar without taking unlimited risk and having unlimited or not unlimited margin, but a large amount of margin. Anyway, what are we talking about today?
Yeah, so today we're going to look at the macro calendar, which was released just a few weeks ago. It sort of shows you the different economic events occurring at different times of the day. So this is really useful to sort of get an overview of things like core PCI and events like that can affect the market. Like if the Fed is speaking, interest rate decisions and stuff like that, and you can see when they're occurring and how important they are. And so when putting on a trade, it's important to look at these events and seeing, okay, is this something I should be aware of? Should I put a trade on after this event or before this event, and things like that?
Yeah, great overview. And it ties in real well with our kind of zero DTE strategy that we're going to present today. So quite exciting. So here's the through market intelligence, you go to the macro calendar here, and then let me get my drawing tool going, and then you could check out today's the 3rd, and then you could see that we just had a little bit. So we score all these events and then graphically show them. So this is a really cool way to think about your trading. So like today, you might want to, if you don't want the market to move, you might want to enter a trade, after this. And it looks like there's a big one on Wednesday, Thursday before the open, Friday before the open. So those are times that you would want to avoid if you're short, if you don't want the market to move. And then we show the previous, what the forecast was, and when we get the actual, we collect that and get that going. And the importance here are all the stars for each one. So for now, we would think about entering a trade for the rest of the day, because there's not a whole lot else. There's nothing in the macro coming. Obviously, the market could still move, but we're already past a lot of the economic events for the day. So anything else on that before we kind of start in on some other things, Tyler?
Yeah, it's a good explanation of it. Let's go into this zero DTE strategy you're talking about.
Okay, great. So I do a lot of back tests, and there is one particular one. It kind of goes against your intuition, but it's a short strangle with a long strangle. So these are the kind of payoff and equity lines that you like, and then, there aren't many drawdowns. It just keeps going up. You could leverage this a bit, you think, but we'll show you why you can't leverage it too much. It's got a good sharp, good Sortino. That's relative. Like there are other great trades and strategies out there, but it's a little bit less. This is more of a strategy that keeps putting it on, systematic strategy over time since 2007. So it's hard to get a good Sharpe ratio like this with that type of strategy. But this is great. The drawdown's only 4%. Your annual returns 4.5%. If you look down, so that's the graph, and then you look at the monthly returns. So these are the annual returns here. Only one losing year was, interestingly, 2016. We rarely see that. This is IWM, so it was a little bit crazy. 2016 was a little different for IWM than many people are familiar with SPY. But this is the kind of strategy that you like. So what is the strategy? We combine the strategy so we don't have the details here, but I could go get them. But basically, it's selling a 0 DTE if you could find it. Back in 2007, they didn't have it. So I'm going to go to the bottom of these trades. So we show all the trades, which is great. 16, 17, 18, 19, 20. So we could see the kind of recent trades here. So you could see that, so let's just go back to just some dates here. Here's 2024. So here's some May. So here's a typical trade. I'll raise it up on my screen. So it's either a 2-day or a 1-day. Here it's a 2-day, where you sell kind of out. So it's very short dated and wide. So you're hoping to get zeros up here, meaning you're hoping that you don't. This is when you lose, and you get out at 60%. So it's basically selling short-term wide strangles, not getting that much money back, but then you have a long strangle against it, which is a longer term strangle, so you don't have a lot of decay. So seems odd, but again, I've been doing this strategy for a little bit. It's working pretty good, and then we have alerts that will say if it's getting close to being breached, and then you could exit the trade. And the cool thing is that you leave the long strangle on, and so you come in if there's a big move, then you have that long strangle on. But that long strangle again is very far out of the money. How's that explanation so far, Tyler?
Yeah, it's a really interesting strategy, and I just wanted to clarify. If I wanted to replicate that backtest, I'd have to go to the legacy backtester to run the combined backtest feature, right? So.
Yeah, good point. So, so I should also mention that what I like to do is look at similar market-wide strategies. So I've tested it in NDX, tested it in SPX, tested in SPY, and then IWM is the one that we were looking at. And so, and you can see some of those results are still pretty good. Not as good for the NDX. But SPX, SPY still look pretty good. And the way you do it is you test a particular long strangle. So let's just look at IWM, and then we could see the inputs. So the inputs are long term. So 150 days is our target, and we'll take anything between 90 and 222. Our deltas for the long call and long put are similar, way out of the money, only 2 delta. Half a delta to 7 delta is a min max. And we exit at 200% profit and loss. So you double it, you get out. So that's the way the trade is set up on the long side. So let's see, on the short side, let's go down to IWM again. IWM. Short strangle. So this is a, and again, this isn't recommendation, but go paper trade these for a while, back test it. So this is a 1 day target, and then we'll take anything. The reason it's so wide is because back in 2007, they didn't really have these short term, and so you're out of the market for so much. So I made it a little bit wider just so we could get some data from the earlier years. But this is 6 delta on the call, 9 delta on the put short, and then let's see what else. Here's that getting out at 60 delta. So if if that leg was breached, then we'd get out. So, and then you combine those, as you mentioned, and this is again the legacy, and this is a real neat feature, and it allows almost infinite flexibility, because then you could take the long strangle and the short strangle, combine it, and you can combine it in any weighting that you want. So I just did 1-to-1 and combined it. So that's how we got the strategy that we were looking at before.
Got it. That makes sense.
So then what I like to do is go to the options. So then what I do is I try to look for days when there's not a whole lot going on. So if I were getting into the trade on Wednesday, I get after 10 a.m. And again Thursday afterwards. And then kind of the neat thing is that once you have a long on, you just roll the short, and then then I kind of stagger the longs, maybe I don't know, every 2 weeks, month or so. So you getting into the trade that way. Does that make sense? Staggering, so you end up you don't want to have all of the expirations and all of the centers only at one date, especially with a 150-day long strategy like that long calendar. So I'm as you get into it, I like to stagger it, and then when it rolls off, and a short strangle, when that rolls off, then I look at the market intelligence and then figure out when I want to get in. And sometimes I'll even not get in if there's too much going on. How's that sound?
Yeah. So is there an option scan that we can share with everyone to, sort of help scan for this strategy?
Yeah, actually, that's a good point. So here's IW. I've been using XXSP because a lot of these you hold at expiration, and these close right at expiration. I think IWM does too, but we'll have to look at that. I'm not sure if they trade into. Again, I'll have to check on that. But so I've been liking XSP as well on this. It's the mini SPX. So let's look at that right now. But so this is the SPY short long term, and then that's the back test name. But I'll share this with you afterwards, and we'll make it available on our templates. Tyler, how does that sound?
Yeah, that sounds great.
Okay. So we're not finding any right now because I have a very tight max here. So let's put 4 days. So this will be our double diagonal for today. So this is a double diagonal, and then let's just see what it looks like. So you're selling. This is tomorrow, expiring tomorrow. 520s, 530. So you're only getting what is that? 40 cents, and then but for 150 days. You're only paying, so the net amount is a $1.50. So, obviously these are very wide. This is a very wide strangle. But this is the trade that we'll put on today, $1.55. So again, give the market makers a little bit, and then we'll force this trade, and we'll watch this. All right, so we filled on that in our paper trading. So that's what we'll be watching why don't we do we'll do an IWM as well. So with the option scanner, I could just change out XSP and put in IWM. And then let's see if we can get a shorter term. Nope, it's not finding any. Still nothing. Okay.
Maybe the some of the column filters in the table, like the S.
Oh yeah, that's it. Yeah, thank you. Oh, there. And it just took a second. Now it came in. Yeah, so you could. Let's take a look at this. It's called the double diagonalness. That's the name of it. That's the new ability to change the name up there. It's very cool.
Yeah.
Yeah. So here's an IWM trade we could check out. That looks decent. So let's pay it. I'll even pay it. I'll force it. So we'll watch this too.
So you're setting up. Can you go over again why you're setting up these really long dated trade? Like, why isn't it any shorter? Like, could I do a month away or 3 months? Why does it have to be?
Yeah, I mean, you could, but we're looking at long strangles, right? So if you only do a month, and we could probably run it in, if we just were to press, SPY, neutral, long strangle at the, so nearer the money, shorter term.
We have this in our backtest finder as well. So we don't even have to run a backtest on this one specifically.
Yeah, exactly. But the point is that this is going to be like losing 4 or 5%.
Gotcha. Okay.
So you don't so the key is to, that's a good question. Good question. The key is to, okay, so let's just look at the short strangle on its own. So here's the IWM short strangle. And first of all, it does two things. One, it allows you to, some places won't let you just naked sell a strangle. And what it allows you to do is use margin a lot better. And then also on the times when this does poorly, you might do the long strangle will do better. So, right. So that's the short strangle. Long strangle is, again, going to allow you without much cost. It's less than 1% loss.
Mm-hmm.
It blips up when you do poorly. Like when the market's down hard, this one does decently.
Is that because like the delta and the Vega sort of play off each other in a way that's profitable for you?
Well, yeah, I mean, it's just the opposite trade. And it's so far out of the money, it doesn't decay away. So it takes a long time. So you have units for a long time, and you're not paying a lot for it. And then, so it stays on and does well on times of a lot of duress. I mean, you're only making 1% in 2020, right? So
yeah, but you
doesn't
want to capture those,
but it does have moves.
Yeah.
Yeah, you want to capture the big moves. You want to use margin in your favor. So and not lose too much, and have units still. So that's what I like about the strategy. It's still like a selling strangle strategy. Does show does do well in back test, but you want to have something against it, and just in case something happens. And a lot of these times, if something bad happens overnight, you may not have any short strangles on, or if you have a total of 10 long strangles out there, you might have only 4 open, so you'll still have more long strangles than short strangles. So then that you even end up doing better in those types of environments.
Gotcha. And you said you let this run till expiration typically?
Yeah. So this one you get out at 200% profit.
Okay.
So after you make the trade, it's 200%. So so it's something like you get in at maybe something like $2, and you'll get out at what is it, $6, right? Because it's $4 divided by 2, so that's 200%.
Interesting. It's interesting how this is a strategy where you're making money primarily on the short strangle, which is primarily a credit strategy, but you're turning it into a debit strategy, but you're still capturing a lot of the money from the short strangle.
Yeah, I mean the debit lasts 150 days, and the short strangle lasts 2 days. So you're getting so much money from this, right? So
are you entering the short strangle? You're entering it over and over and over again.
Yeah. So in my positions, I will we'll go in and actually enter my scans. I have here's the short scanning component only. So that's what I'm usually doing, right? Because I'm closing out.
So this is what you're doing sort of on every 2 days, basically, or every 2 or 3
It's actually every day. I just look at how many I have open, how many closed out. Because even sometimes if you have a whole day, you'll be able to close. Like I'll close it out for like 2 cents or 3 cents or something like that. The short strangle.
Gotcha.
Yeah.
And going back to the macro calendar, you want to put the short strangle on after the market's seen any sort of economic events that have occurred that day.
Yeah, that's why I love the market intelligence thing. It shows me in great detail like when I should be doing it. So it's great.
Yeah, that's cool.
Yeah.
Yeah, it's an interesting strategy. Definitely cool to backtest and cool to see that combined backtest feature in the legacy version. So
yeah,
we'll put that option scan up in the templates for everyone to see.
Yeah.
One
it's
thing,
not for
Matt,
the make or part. It should be paper traded, and it's not investment advice, but it's a strategy that backtests well that we're paper trading and checking out. So you should should be very conservative. Don't just start trading a trade. Really look at it, backtest it, see how the backtest works, why it works, backtest other names, and then after all that, then you could make a decision whether it's the right strategy for you.
Yeah, and if you guys find something interesting, and we'll continue talking about this in the community tab, which has been seeing a lot of traction lately. We use the community tab to share trade ideas and ask questions, and we're seeing a few members of the community doing that as well. So that's really cool to see.
We should say that we fixed this.
Yeah.
One of our numbers out of 300 of our numbers was off in the intraday interpolation. So someone caught it and we fixed it.
Yeah, very cool to see. One thing, Matt, that we haven't done this show in 2 weeks. So since then, we've made some updates to the trade ideas tab. We're now only showing you backtests that have the entry triggers in the backtest. So these are backtests that we've tested entry triggers such as like the VIX level or the RSI, the simple moving average, the slope percentile, things like that. So it's very cool because these entry triggers correspond to the current environment. So the backtest that we're showing you in this table of trade ideas is where those entry triggers meet the current market conditions. So these will be changing throughout the day and day to day.
Yeah, that's a really good point. Every 10 minutes it updates, right? So we should also mention that we're up to 180 million, which is why we made the change. We have so many now. We just want, for the trade ideas, this is just the cream of the crop. These are the ones that do well when in this particular environment. So what that means is we only will get into a trade, simulate the trade if if the criteria are met that it is in the market right now. Meaning, the VIX is low. That means it's below 15 to 20, I believe, is medium, and then high is 20 and above. RSI is moderate. That's a 14-day RSI. We have a skew or slope percentile is moderate. That's how steep the put call slope is. The stock price is above the 50-day. We also have a 200-day moving average. And did I miss anything?
Right.
Seems like there's one more. RSI VIX. Yeah, that's it. I think that's it. Yeah, good point.
Yeah, I mean, just to reiterate, like these trade ideas are all back tests. So we're getting these are trades that we've scanned for with the option scanner, but they've also been back tested. So that really adds a lot of value to the trade idea, right? So it's no longer just an idea; it's something we've actually tested.
Right. So yeah. So here's the back test, and so it looks a little choppy. That just means that it's only going in when these two things occur, when the stock price is above the 50-day moving average and the slope is moderate. And you could see that this was only in 44% of the time. And then, you could, again, view the monthly returns, and there's, a lot of teeth missing here, a lot of months missing. And that's because this particular group of indicators weren't going during those times, weren't being met at those times. And you could see in the other months, how you did. And then, of course, you could always see the trade log, how they're doing. I like to just scroll through years and just see, hey, look at win. So it's a nice win rate. But then when you lose, you do lose a fair amount on this. It's a diagonal. So you're going to win a lot, but and when you lose, it's more. But obviously, this has worked on the overall this particular strategy. And again, a good thing to do is to find similar back tests, even back tests with different tickers is good to look at too. So yeah, so that's a great update that we've done here, Tyler.
Yeah, Matt, if you can pull those results up again with the graph, I want to address a question we've received. So sometimes it's useful, people want to see sort of the line matching up with the stock return. It's sometimes hard to see, how big that drawdown is when you're looking at a very flat line. So we have this percent of starting capital to be used on each strategy trade drop down that you can change. And that essentially invests a percent of that $100,000 starting capital that you can also change on the left. So it's just sort of an easy way to see, okay, how much would I have had to invest to sort of match the, dollar return there. So.
Yeah, that's true. That's a nice feature, and you'll end up going the other way too on some ones that are very volatile.
Yeah, definitely, depending on if it's a debit or a credit strategy, right? A lot of strategies that are, debits, you have to, pay a lot more to match that return.
Right.
So, yeah.
Very powerful. I mean, that's what makes the dashboard, we think, one of the best platforms, because it goes all the way from back testing, and it matches our pillars. Our pillars are research, which is back testing and all the indicators and the data. Implementation, that's the ability to trade through brokers and the ability to get exit alerts. Risk management, the ability to see, what is your risk on these. So we haven't really spent much time on that, but you can see that the trades that we put on, it is a little bit more risky. This is over the next 3 days. If it goes into the worst spot for this trade, you could lose $700. And what was the other one? XXP is a little more than that. 1,400. Do we put that one on? Yeah, we put that one on too. So that's risk. And then reviewing, is being able to journal and keep track of how well you're doing. And there's also some kind of review in the back test where you could update back test and see how the back test did over that certain time period. So that's the approach. That's pretty awesome what we've done so far with this dashboard product, Tyler.
All right. Yeah, thank you, Matt, for another great show and good strategies. We'll upload those to the option scanner templates so that you guys can copy them and use them. make sure to check out our community tab as well. We've been getting a lot of good feedback on there, and we're constantly looking at that to make changes and get your guys' opinion and feedback on the tools. So keep posting on there. You can also post in the comments if you have any questions, or email us at support@orats.com. Unless you have anything else, Matt, we'll see you guys again next week.
Yep. Thanks a lot.
Thanks.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.